for starting your week with us. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. We have plenty on our plate today, so let's get started with a look at today's highlights. Korea continues to struggle with its massive household debt, as well as growing corporate and government debt, as the country's key rate remains at a record low. We might be getting more three-day weekends next year as the government reviews the so-called Happy Monday proposal, which would move some of Korea's major holidays to extend the weekend. These stories and more coming right up. But first, economic policy took center stage on this Monday during the 20th National Assembly's first interpellation session, which will run through Tuesday. Lawmakers from the ruling Saenuri Party and the opposition clashed over the issue of corporate taxes. When asked about the possibility of a tax hike on businesses, Prime Minister Hwang Kyo-ahn said an increase in tax rates would burden the public and corporations. The main opposition Minju Party of Korea has proposed a bill to push corporate tax rates up to 25% from 22% for companies with a tax base above $43 million. On the country's foreign exchange front, the Prime Minister said introducing a managed floating exchange rate, as in the case of China, is something that is being comprehensively reviewed. This was in response to a ruling party lawmaker who has argued this should be considered given the risks of a potential currency war in a post-Brexit era. And there are growing calls on the government to come up with new measures to tackle the country's snowballing debt problem among households, corporations, and even the government itself. Our Hwang Jae has the details.
Korea's central bank has been working hand-in-hand with the government to prop up the local economy suffering from sluggish demand both at home and abroad. With that, the country's key rate dropped to a record low of 1.25% in June, marking the fifth rate cut since August 2014. While many have been questioning how the rate trims have been helping the economy, there's no doubt the expansionary policy has resulted in ballooning household debt. Bank of Korea data shows the country's household debt shot up over 11% as of the end of the first quarter this year from a year earlier to over $1 trillion. But concerns are not just growing about debt among households. Corporate sector debt rose over 6% in the first quarter from the previous year to around $830 billion. Korea's national debt also topped nearly $520 billion last year, with only a little room for improvement ahead, as the government laid out an extra budget late last month to rev up the economy. A similar amount of supplementary budget was introduced last year. With that, some pundits argue the government should take a more active role to reduce regulations and foster new industries to hopefully raise the income level of households and profits of companies that will in turn allow them to pay back their debts. Hwang Jae, Business Daily.
Foreign direct investment pledged to Korea hit a record high in the first half of this year. The Trade Ministry says FDI commitments during the January to June period came to over $10.5 billion, up nearly 19% from a year earlier. Now, this is the largest amount for a 6-month period and marks the second time the figure has topped the $10 billion mark. Despite uncertainties at home and abroad, the ministry says the rise comes on the back of investor confidence in Korea's fundamentals, as well as the potential of its new growth industries. Investment pledged in the manufacturing industry jumped almost 160%, and the amount in the service sector was up over 13%. FDI commitments from the EU soared more than threefold to $4.2 billion on year, while that from China rose almost 80% to $710 million. And to tell us more about last week and this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Thanks for having me, June.
All right, let's get started by looking at the Korean stock market. Tell us about the last day of trade and the market's overall performance last week.
Yeah, the Korean equity market continued its 5-day rally, raising post-Brexit losses. The Kospi rose by 0.8% to close at 1987, surpassing 1986 before the Brexit vote. Helped by the U.S. stock market rise before market open, foreign investors bought shares for 3 consecutive sessions. Most blue-chip stocks joined the rally, with Samsung Electronics continuing to surpass its 52-week high. The Kosdaq continued its 5-day rally as well, closing at 684, up 1.3% from the previous session. On a weekly basis, the Kospi surged by 3.2%, while the Kosdaq skyrocketed by 5.73%. Expectations for policy coordination among countries to minimize the negative spillover effects of Brexit, stimulus measures announced by the Korean government and the Bank of Korea all boosted investor confidence.
Then how did the Korean stock market close on the first day of this week?
The Korean equity market kept its positive momentum in the first session of the week. The Kospi rose by 0.4% to close at 1995 as foreign investors expanded their stock buying activity in the Kospi market and the futures market. The index was lifted despite the sell-off by both institutions and retail investors. The Kosdaq rose as well, closing near its intraday high at 688. As we enter July, experts cautiously project the Korean equity market is likely to continue its positive momentum. First, overall investor confidence has recovered quickly, with most stock markets around the world rebounding from post-Brexit losses. Lower expectations of future U.S. rate hikes might be another factor that will help lift sentiment as well. CME FedWatch, a futures market betting on rate hikes, now sees only a 5.9% possibility of a September rate hike as of last Saturday. We have positive catalysts domestically as well. The government's fiscal stimulus package of more than 20 trillion Korean won, or 17 billion US dollars, is expected to cushion risks from corporate restructuring as well as external uncertainties such as Brexit.
Now, it looks like the Q2 earnings season, set to start with Samsung Electronics, could be the key to a further rally in the market. So what are the expectations?
Yeah, Samsung Electronics will kick off the Q2 earnings season with its earnings guidance announced on Thursday. Bloomberg estimates Samsung recorded 7.4 trillion Korean won in operating profit last quarter. High expectations are reflected in the recent stock price surge. Now, share prices of Samsung are just about 100,000 Korean won shy of its all-time high recorded in 2013. Experts expect robust earnings of the company to give positive momentum to the entire market. The overall picture for the Q2 earnings season is not gloomy either. Shinhan Investment expects a 18.5% year-on-year increase in profit.
Then what are some other market events around the world this week?
An economic indicator with great significance this week will be the U.S.'s June employment report announced on Friday local time. Experts project the labor market created about 180,000 jobs last month, rebounding sharply from only 38,000 in May. Sluggish employment trends, along with uncertainties surrounding Brexit, are expected to trim expectations of rate hikes in the U.S. In contrast, unexpectedly robust job numbers can raise possibilities of earlier rate hikes later this year. The minutes of the June FOMC meeting, released on Wednesday, will draw much attention from investors who are eager to look for others' hints for future rate hikes. Speeches by Federal Reserve officials, including New York Fed President William Dudley and Fed Board Governor Daniel Tarullo, are also expected to attract market attention. This has been Choi Jin-seok for Business Daily.
Korea's shipbuilders have recorded new lows in fresh orders in the first half of the year, putting them behind their counterparts from China and Italy. According to Clarkson Research Services, new orders for Korea's shipyards tumbled by 88% on-year in the January through June period to 830,000 compensated gross tons, or 27 merchant ships. This was the lowest figure ever recorded by the former market leader since data was compiled by the UK-based research firm in 1996. This comes as the volume of new orders placed around the globe was only 35% of what it was the year before. Chinese shipyards took the most, winning a combined 2.4 million compensated gross tons in the first half. Volkswagen CEO has rejected calls to compensate European customers following its $15 billion settlement in the United States over its emissions scandal. Speaking to a German newspaper on Sunday, Matthias Müller said the situation in Europe is different. His remarks come after Europe's industry commissioner said it would be unfair for European owners to be treated differently due to a different legal system. Müller said U.S. limits are stricter, making the fix more complicated. Taking part in the buyback is also voluntary for customers, which is not the case in Germany. He added that while automaker was on a solid financial footing, replicating the U.S. deal in Europe would be too expensive. Late last month, Audi Volkswagen Korea reiterated that it has no plans to compensate Korean customers, as it has yet to be charged with any crime under local laws. It's no secret that demand for milk has dropped over the years, but because of a unique pricing system, the purchase price of milk has not budged despite overflowing supply. And the price of raw milk has been revised down slightly last week, but it's unclear whether the savings will be passed on to consumers. Our Eunice Kim has more.
A large-scale demonstration by dairy farmers from all over the country in Seoul's financial district of Yeouido back in 2008. From such drastic price negotiation techniques came a sliding pricing mechanism that pegs the price of raw milk to the cost of raising cows. The problem is the demand for milk has been slowing with the country's low birth rate. As consumption has dropped by 10% over the past 10 years, the excess supply has been made into powdered milk. But even as milk stock grows, the prices have not changed.
The news says there's a backlog of milk, but you don't see that reflected in the supermarket at all.
In fact, since the sliding pricing mechanism was installed in 2013, the price of raw milk had not fallen in the 2 years since. But last week, the Korea Dairy Committee agreed to drop the cost of raw milk by 18 won per liter for the first time, even though production costs had dropped by 33 won.
It's the first time we're lowering the price of raw milk. It comes with consideration to last year's deferred price increase, changes in consumer prices, and the supply and demand.
The 18 won decrease amounts to less than 2 US cents. So some in the milk industry say it's unlikely that minuscule difference will be felt by shoppers at the supermarket. And given labor costs and distributor margins, the price of a carton of milk could in fact keep rising. Eunice Kim, Business Daily.
The cost of eating out in Korea has risen quickly in the months of April to June. According to data by Statistics Korea, while inflation in the second quarter stayed weak at just under 1%, the cost of eating out went up by 2.5% from the same period last year. The report surveyed the 38 most frequently consumed products when people eat out. The two most popular items, the distilled liquor soju and rolled rice wraps kimbap, saw price increases of over 12% and 5% respectively from the year before. The prices of ramen noodles, tteokbokki rice cakes, and bulgogi rose over 3%. As Statistics Korea officials said, the price jumps are linked to corresponding rises in the cost of food ingredients and labor. So when we usher in the new year, a lot of people flip through the new calendar to see how many holidays they get. Starting next year, you might just get a couple more days off as the Korean government looks to introduce a new holiday policy. Our Lee Joo-young has more.
Hangul Day, Children's Day, and Memorial Day. These commemorative holidays are some of the strongest candidates for the so-called Happy Monday scheme recently proposed by the government. The idea is to move these holidays, which are celebrated on specific days, to a Monday. By celebrating 3-day weekends, the government hopes to boost domestic consumption, which has long remained feeble. Take the celebration of the Korean alphabet's Hangul Day, which falls on October 9th this year, a Sunday. Moving it to the third Monday would offer up a longer holiday, giving more people time to travel and guaranteeing their right to rest. The review of Happy Monday comes after the government designated a temporary holiday in May, creating a 4-day weekend. This boosted department store sales by 16% on year. The number of visitors at national palaces shot up by 70%, and traffic also increased by 9% during that period. The Ministry of Strategy and Finance says it hopes to see an overhaul in Korea's holiday system as early as next year, following countries like the US and Japan, and that it will commission a detailed study on the potential economic impact. But stumbling blocks still remain, with some pointing out the proposed change could undermine the significance that certain dates hold on the Korean calendar. Lee Ju-young, Business Daily.
And that brings us to the end, but we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching and see you soon.